I mean, silver was really bound to take off. It was near what 90 to 1 with gold, record lows. Gold was marching higher really from 2000 to 2200, 2300-ish. And silver hadn't even moved. Silver was still below 25. And then all of a sudden it spiked up to 30. Pulled back a bit, but I think now silver has broken out and it's joined gold and will ultimately eclipse gold as far as the percentage gains, not the price, but I think percentage wise, silver could hit $50 an ounce before gold hits 3,000, and so that's a much bigger gain for the price of silver than the price of gold.
Gold's upward trajectory has been swift and impressive. Within just 6 weeks of its breakout above $2,100, the precious metal exceeded $2,300 and quickly moved beyond $2,400. This rapid ascent suggests that the coveted $2,500 mark may soon appear. According to data from FXStreet, silver prices experienced an uptick on Friday. They traded at $28.32 per troy ounce, marking a modest 0.28% increase from their Thursday price of $28.24. PeterSchiff, a well-known investor, holds an optimistic outlook on silver's prospects. He believes that silver has experienced a breakout and could outperform gold in percentage gains. Schiff envisions a target price of $50 per ounce for silver, surpassing gold's performance before it reaches the milestone of $3,000 per ounce. The precious metal has long been favored as a hedge against geopolitical uncertainty and, on occasion, inflationary pressures. Despite this, global gold ETFs experienced their 9th consecutive month of outflows in February, although the trend began to reverse in March. North America witnessed significant outflows, while Asia was the sole region to see inflows. Year to date, outflows from global gold ETFs have amounted to a substantial $5.7 billion. Peter highlights the discrepancy between record-high gold prices and the significant outflows from the largest gold ETF, suggesting a gap between market sentiment and performance. He believes the rally in gold and silver may persist until substantial retail inflows trigger corrections. Peter also notes that the launch of Bitcoin ETFs diverted attention away from gold's rally, resulting in significant capital inflows into these digital asset funds. Spot Bitcoin ETFs in the U.S. recently surpassed $1 billion in net inflows, with BlackRock's iShares Bitcoin ETF leading the charge with a record $849 million inflow. Come along as we explore the valuable insights provided by PeterSchiff. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I mean, silver was really bound to take off. It was near what 90 to 1 with gold, record lows. Gold was marching higher really from 2000 to 2200, 2300-ish. And silver hadn't even moved. Silver was still below 25. And then all of a sudden it spiked up to 30. Pulled back a bit. But I think now silver has broken out and it's joined gold and will ultimately eclipse gold as far as the percentage gains, not the price, but I think, percentage wise, I think that silver could hit $50 an ounce before gold hits 3,000. And so that's a much bigger gain for the price of silver than the price of gold. But again, I think the reason was the central banks. They weren't buying silver. They were just buying gold. They don't have room to store silver. And also the central banks aren't investing in the mining stocks. So, it's the retail public and institutions that might have been investing, and they were not. Again, they don't understand it. They think that gold or silver should be going down because it's a soft landing. Everything is great. Buy the Magnificent Seven. And those who are worried, well, they were buying Bitcoin. I think that the launch of these Bitcoin ETFs really, provided that smokescreen, because when everybody should have been talking about gold's rally, they were talking about these Bitcoin ETFs, which were the most successful ETFs as far as how much money went into them. They're not going to be successful from the point of view of the people who were dumb enough to buy them. It's going to be a complete failure. But Wall Street did, sucker in a lot of speculators, so they're making money for now in these ETFs. But I was actually watching during that first month or so we're trading, like there was 1 week where gold went sideways and gold stocks were down like 15%. And it was like, well, what's going on? And I thought, well, maybe people are selling off their gold stocks to buy the Bitcoin ETFs because the money had to come from somewhere. And in fact, all year, we've had record outflows out of GLD, which is the biggest gold ETF, at the same time where gold prices are running up to record highs. And normally it's the opposite. Normally, the retailers are chasing a rally, they're not selling into the rally. And so what that tells me is that they've got it wrong. This rally has legs. It's not going to be until we have huge inflows from the retail public that we're probably going to get a significant correction. Probably not even a bear market at this stage, but we could have a 5 or 10% correction if the public jumps in. But so far, they're still selling. Well, first of all, I think the strength in gold really flies in the face of the narrative of a soft landing, of a return to 2% inflation, of rate cuts coming. And so they don't really want to acknowledge that or question these beliefs, or acknowledge the warning that gold is sounding on inflation, on fiscal policy, on monetary policy. But also, I think a lot of the financial media has been captured by the cryptos and the Bitcoin people who are spending a lot of money advertising on all the financial networks and who flood the financial networks with their guests. And so I think they've really pushed gold to the back burner because as far as they're concerned, gold's irrelevant because now we have something better. We have Bitcoin, which they claim is digital gold. But it's not digital gold at all. I mean, it's no more digital gold than digital food is food. Gold has real properties in the real world that are vitally important to its value. You can't just replicate that, digitally because you can't substitute Bitcoin for gold in any capacity in which gold is used. So it's not an alternative.
Federal Reserve Chairman Jerome Powell recently engaged in a fireside chat at the Wilson Center's Washington Forum, discussing economic trends in North America. Powell emphasized the robust performance of the U.S. economy while acknowledging the lack of significant progress on inflation this year. Despite the overall strength, Powell highlighted the labor market's transition toward a better equilibrium. In contrast, Peter asserts that the Federal Reserve should consider raising interest rates in response to rising inflation, which he believes would favor gold. However, a majority of 100 economists polled by Reuters anticipate that the Federal Reserve will delay any rate cuts until September. Half the economists predict only 2 cuts this year, with approximately a third forecasting additional cuts. Peter contends that despite previous rate hikes, interest rates remain low and supportive, contributing to an environment conducive to inflationary pressures. Let's get back to the interview.
I think there's still a lot of fear and doubt in the market. Just look at the underperformance of the gold and silver mining equities. Traders are, very skeptical of this rally. They didn't expect it. In fact, just a couple of months ago, Newmont Mining and Barrick Gold were basically downgraded to sells, the equivalent, holds by Wall Street because they saw no upside in the price of gold. And that's when gold was around 2,000. We're now around 2,400. 20% increase. That's pretty good upside. And, it's still early in the year. And, it's just that the traders still don't understand it. They think, well, the Fed is going to cut rates fewer times than we thought, or is going to delay the rate cuts. And they think that's bearish for gold. But it's really not bearish because it doesn't even matter if the Fed cuts rates at all. The Fed should be hiking rates, and they're not. And that's what's bullish for gold because inflation is already headed back up. It never got down to 2%. Now it's headed back higher. I think we're going to take out the 9.1% peak from mid-2022. I mean, all the forward-looking indicators, commodity prices, not just gold and silver, but all commodities are showing incredible strength, much more so than we saw in the previous year. And credit growth has continued unabated despite the Fed's rate hikes. Government is borrowing more. Private sector is borrowing more. Everybody is spending. Deficits are out of control. There's no sign of any fiscal restraint. It's the deficit spending that is the driving force behind the inflation. and the Fed monetization and the artificially low interest rates. And even though the Fed has hiked rates many times and we're back above 5%, that's still a low rate. It's still a stimulative rate. It's not a restrictive rate the way Powell and his cronies at the Fed claim. The Fed is still providing easy money to the economy. And of course, we have highly stimulative fiscal policy. So it's an inflationary cocktail, and gold understands this, or gold investors. And the big investors are the central banks, foreign central banks, particularly emerging market central banks, are major buyers of gold. That's going to continue. Investors haven't even really participated yet, but they will, probably at much higher prices.
Federal Reserve Chair Jerome Powell's recent remarks on Tuesday highlighted that achieving confidence in inflation falling back to the U.S. Central Bank's 2% target may take longer than anticipated, dimming hopes for rate cuts shortly. This sentiment contrasts with earlier expectations in financial markets, which had priced in 6 Fed rate cuts starting in March. However, current market projections suggest the first reduction may occur in September, with an additional cut in either November or December. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.